It's Thursday, so we get EIA numbers for natural gas at 10:30. Quite a number for oil yesterday, right? 8 million barrel build almost. Oil shakes it off, trades above $76. So we get natural gas on Thursdays at 10:30. We're looking at the November contract on the NADEX platform. Quite a move already this morning.
7 cents already.
Quite a move. Right at 9:30, you got natural gas trading from essentially $3.25 all the way down to $3.18. We're sitting at about $3.19 right now. So we get the numbers in about 6.5 minutes from right now. We're going to check out some of the commodity spreads. We're going into natural gas. We're going to take a look at the 11 AMs first. Now what's happened here is that we've gotten such a move. We've moved about 8 pennies, right? These got set because they open the 9 till 11 AMs.
Yes.
They open at approximately 9 AM. They're going to get set at 9 AM with price parameters, and you can see that they were set when natural gas was trading about $3.25. So you have $3.25 to $3.45,
yes.
You got $3.25 to $3.05, and then you have a middle one with $3.25 with 10 cents of exposure in either direction. Now you can trade these. It doesn't set up well for a volatility trade going in both directions, though. So let's jump around and take a look at the noons. Noons, you got a little bit difference, okay? Because those are getting set. Now I say noons, those are the noons expirations. And those get set at 10 a.m. And what you can see is that by 10 a.m., we're sitting closer to 320.
Yes.
So now you have the contracts that go from 320 to 340.
Much better.
320 to $3, right? So we're sitting at 319.12. We'll take a look. Here's our bullish spread, which would be 320 to 340. Could be buying this. We're slightly out of the money here because we're not quite within the range of 320. So that's going to be all premium. And then on the flip side, you got your negative spread with 20 cents of exposure to the bearish side. Now in this contract, we're going to have 8 ticks of intrinsic value in there. So there's your difference. You got $8 in premium in each contract.
Yep.
On the bearish side, you're paying for that intrinsic value. So you're looking at about $24 or 2.4 pennies that you need away from that 320 price point. And you have a little bit of a head start to the downside. So if you're a little bit bearish, you got a head start. Not bad. And to jump for the final one, let's see how the dailies line up. Now you got the 8 till 230s, which is nice. Same exact price point. This time, you have instead of 320 to 340, you got 320 to 360. 40 cents, not probably likely, but it doesn't hurt because you're getting charged very little premium for that extra 20 cents. What you are getting charged for is the extra 2.5 hours, though. All right, so on the bullish side, instead of paying 8, you're now paying 14, right? Excuse me, where was I going? That jumped around. Okay, I'm not even going to, that was a bad. But so instead of paying 8, you're paying 14. And then on the bearish side, you again have 40 cents of exposure. But the real deal is that you have an extra 2.5 hours. And so you're paying 23 on the downside. And again, you have some intrinsic value in there. So yeah, you're looking at about 37. And that's, again, about 3.7 pennies away from 320. You got till 230. So that's where you want to make that decision. You want to pay for noon, for like 2.5 pennies, or you want to go 3.5 to 4 pennies to pay for 230.
And that's not bad, really, because the contract's already moved 7 pennies this morning.
You're getting some action.
So there's volatility there.
You're definitely getting some action. And to put it on a daily real quick, just to see, well, I'll put it on an hourly even to see, I mean, quite a run up, right?
Look at that. Just come back to the strength from yesterday.
Just going back to Monday, October 1st, we're sitting at about 305. We run up to all the way 325. We're back to about 318. And we get those numbers at 10:30 when we come back.
Stay right there, folks. Tommy and I come right back. Our phone number is 877-927-6648. Come right back, folks. Welcome back, folks. Dow's down 228. You get the NASDAQ off 104. S&P's down 22. You get that choo-choo train steaming downtown, folks. Natural gas. What do we got with natural gas?
Okay, so inventories rising 98 billion cubic feet. Expectation was a rise of about 87, so a little bit more natural gas than we were looking for. And as you would expect, there's our drop, and quite a number off the bat. So we were trading at give or take, call it 320, right?
Yes.
Those are the spreads we were looking at. We had a little bit of a head start to the downside, and these are 5-minute bars. I just want to make sure. No, that's an hourly. Check out the 5-minute when you put it. There we go. So quite a drop as we were sitting at about 319 above, and now, let me get up the price. We're sitting at about 313. We just got like a 6-penny drop.
Huge.
And to recap,
and the most we needed was 3.7.
3.5, yeah, to 4 pennies for the dailies.
All right.
So here were your dailies. This would have been your bearish spread. That's where all your value would be right now. If you wanted to buy that back, you buy it back for 63. That was going to cost us about 37.
Right.
And again, if you ever got a pop, not sure you would on that type of action, but you'd have exposure to the upside still above 320 all the way till 230. But quite a number as natural gas. I mean, you back this off. We just traded from 325 now down to 314. You're talking about 10 pennies in the span of exactly an hour from 9:30.
That's $1,000 per contract.
In the future, sure. Yeah, quite a number, man. So we'll check back in, but natural gas along with oil, both those markets rocking with some volatility this week.
Huge.
Definitely.
Welcome back, folks. Dow right now down 217. NASDAQ is off 99. S&Ps are off 21. You got a double banger inside natural gas here.
Natural gas, much like oil yesterday.
Oh, my God.
Shaking it off, man. Shaking off the extra build. And we spiked down from about, we're at 319.19, so just under 320. We spike all the way to 312.99, all right? So call it 313.
Yep.
And we're now almost 6 pennies above that level, approaching 319. So what's interesting here is that we had looked at the potential trades with exposure on both sides.
That's right.
We had looked at and said that, you know, you could have sold out your position immediately. You get that type of move if you wanted to, right? So that would have been your bearish trade that you had closed out. Maybe you got $67, which represents the 67 cents that you're kind of below, excuse me, so 6.7 pennies away from that level. And then you'd have your bullish spread still open. Now, what's interesting here is that bullish spread goes from 320 to 360, right? But you don't need to get above that to have value, because right now there's value in that spread because the time is the value, which you own, okay, if you had that. So if you were selling that out, you could sell it right now for $6. Doesn't seem like much, except that you had taken off so much off the table. You're only putting up $37 combined.
Right.
You take off 60, whatever it is, dollars, right? And then you have 6. And the point being, you don't need to go all the way above 320 to gain value if you get it that quickly, because we have in this contract 3.5 hours still of exposure, which that is some premium that's worth paying for, right? It is amazing, and we'll see. But quite a market, man. These commodities, doesn't matter what happens on those EIAs. Like I said, what would have happened if we missed to the other side? You know, what if it was a draw?
I know.
Because both markets, oil and natural gas, seem like shaking it off, man.
It seems like energy in general is going to get more expensive. Well, it is more expensive.
Right.
Already.
Definitely.
Stay right there, folks. We got a fast market coming up next, and then, of course, we're going to go to our man Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon. Thanks, pal.
Thanks, man.
Wow! Go get them, folks. Hold on for the ride.